how does somebody get a loan if they can't get insurance, you know?
No, and that's, goes back to not only like people not wanting to move for rates, but like, what if they just can't sell? Because no one can buy it if
Mhm,
they want to move, but they just can't because
mhm. Also,
there's no one to, purchase that home because of insurance. Earlier this year, I thought I heard that there's some insurance companies basically pulling completely out of California that they will now no longer write.
that's absolutely true. Hi, everybody. Welcome to Realizations, the podcast with Andrea Gordon. As many and most of you at this point know, I started this podcast because I got so pissed off during the NAR DOJ lawsuits and the commission lawsuits that I thought I'll be pissed off for a really long time. And then I thought, well, rather than being angry for a really long time, what can I do that's constructive that could educate the American public about what it is realtors do? Because actually, those lawsuits were all about disrespect and lack of education about what real estate is all about. So I created this podcast so that I could bring people on from various parts of real estate life to talk about different concerns, new laws. I brought on city, legislators, people who were involved in buildings, vendors, other realtors, brokers, politicians of varying kinds, all of it, heads of companies, all of it to show you, the American public, what it is we do as realtors, because I think that there's a very big disconnect between what the job actually is and what people think it is, caused by a lot of these reality TV programs, what have you, which are not real life, just so you know. Anyway, I've got a wonderful person on today, Rachel Clark, who's part of the Broker Action Coalition. And let's just dive right into what it is you do. Please tell us about your organization and what you're geared towards and what you've been fighting for.
Thank you, Andrea, for having me. I appreciate the opportunity to come and speak to your audience. The Broker Action Coalition, or we like to call it the BAC, is here for mortgage brokers. So, mortgage brokers are very similar to real estate agents. They're local to their communities. They're typically small business owners working for themselves or a small company, but they're really in tune to what their community needs, what their problems they're facing, issues they struggle with. It's not a big bank that doesn't know your name. It's Joe down the street that sponsors the Little League team. So we're really here fighting for mortgage brokers to level the playing field between us and the big banks. And so that's really at the core of everything we fight for is how can we make it better for consumers when they're trying to purchase a home? And how can we make it that they have every opportunity to buy a home? Right. And so our biggest legislative win so far is called the Home Buyers Privacy Protection Act. And we like to refer to it as the trigger lead bill. And what this did, it stopped the sale of trigger leads, which many of your consumers probably don't know what a trigger lead is. But when they were going to buy a home or they're going to buy a home, they get their credit pulled so that the mortgage professional they're working with can approve them or tell them how to fix it, things like that. When the credit is pulled, the three credit bureaus sell that data. And it's not the person who pulled it, it's these bureaus that are large companies sell this private consumer data to multiple people, and then they're bombarded with phone calls. And one, it's a basic invasion of privacy, but two, it's really annoying, right?
Yeah.
And like with like a borrower that you've been working with for a while potentially, and they get their credit pulled. They only know you. They only know Rachel. I've been working with Rachel, the mortgage person, and then I get all these calls like, what did Rachel do? And so it's very confusing. The public, as you stated earlier, is just uneducated about what's happening. And so that was a big thing that mortgage brokers fought to end. And we were successful this year in getting legislation passed and signed. It takes effect in March. That sale of data will completely stop. So
Beautiful.
we are very excited about it. And really, the basics of it was the process for a consumer was confusing. And really,
Right.
it's not fair. to the consumer to get bombarded like that. So
Oh,
that is
kidding.
why we fought so hard for it.
And also, you provide a lot of very sensitive material to your mortgage broker. And if that material is being sold out, who knows whether it ends up on the dark web, whether it ends up, who knows? I mean, the without it being regulated truly properly, it could be a gigantic problem. Now, Rachel, where are you based?
I live outside of Houston in Texas.
Hmm. And so this is nationwide what you've been working on. You know,
Yes, our organization.
one of my pet peeves in real estate, and I talk to people all over the country, is that real estate is practiced very, very differently depending on what state you're in. Like I'm in California where I handle the entire contract and I go all the way from, contract to closing escrow. Whereas if you're in New York, at a certain point, the contract is taken over by an attorney and closing occurs with an attorney as opposed to with a realtor. Whereas if you're in South Dakota or North Dakota, it might be completely different. How are mortgages affected by this? Are you state by state or is it uniform in some way?
Um, there's a little bit of uniform there. So each state has their own license. So
Hmm.
I have a Texas mortgage license. I can only write loans in Texas.
Hmm.
Now, I can go get licensed in any state I would like, but I have to know the rules and regulations of that state. In the mortgage world, though, we still currently have the CFPB who does kind of some federal regulation as far as like overarching rules. This is what you need to follow and things like that. But also states can impose rules above that. So like Texas could say, we in Texas have very strict equity laws.
Hmm.
And so, you're held to a certain loan to value. You can only do it on conventional loans. You can't do an FHA cash out in Texas. Other states allow that. So,
Hmm.
state by state can impose regulation that is like above what the CFPB kind of
And
base
doesn't
requires.
and the state regulations always supersede the federal regulations. Is that correct? Or is it the other way around?
No, because like in Texas, like the equity, they supersede what the CFPB might say or FHFA would say as far as what their cash out requirements are. Texas supersedes that. The
Hmm.
problem is I know in real estate, usually the agents are more local, right? But in the mortgage side, you can do loans in multiple states and it's not
Right.
as difficult, right? But what happens when Texas has a rule that conflicts with California? How do
Yeah.
you know what I mean? Like, and so that's one of those things,
Exactly.
so the CFPB kind of love them or hate them. There are some rules that we're glad they handle because
Mhm.
if the states took it upon themselves to make what they felt like the rule should be, you could potentially see like disagreement between states to say, well, we want this to be the rule, right? But over here says, no, we want it to sound like this. And so when you get audited, because as mortgage brokers, we get audited. And
Mhm.
so, uh,
Same thing happens in real estate as well, by the way. Real estate.
yeah, so it's one, trustful. But if you're doing it in multiple states, how do you abide by this state's rules if they conflict directly with this state's rules? And so that's kind of one of those things that's hard for some smaller brokerages like myself.
Right.
I don't want to go get licensed in multiple states. I don't want to deal with the compliance of it all.
Whereas what happens though is you end up with behemoths like Rocket Mortgage or Bank of America or name any number of them who are licensed in all 50 states and you're competing with them. And because of the volume of business that they do, they can like I've noticed like even in the middle of Wells Fargo's huge trust problem with the American public, they were getting smoking rates that nobody could match, and the reason why was because they were able to discount because they have such enormous volume that it enabled them to basically cut their competition, and it's not fair. That's to me, I do believe that all of these things should be regulated. I think that my own belief at this point is that real estate should be regulated in all 50 states. and it should be run the same way. Now, you're going to end up with differences because, you might have one community where they're on septic rather than sewer, or another community where, it's largely high-rise condominium buildings and they have different needs and different regulations work differently. I can only imagine it's the same thing for the mortgage industry where you have to take those things into account. But nonetheless, I think if there were a way to create a blanket set of regulations and rules for the whole country, it would level the playing field for everybody.
No, I agree. And I think the problem sometimes with these regulations is the person creating them is not somebody like you or I that like sits in the seat daily and deals with these problems.
Oh my
You
God.
know, it's like
Yeah.
if you would just let some agents and some brokers like come in and like tell you what they should be to make it fair
Yeah.
across the board, I think it would make more sense, right? Because at the end of the day, we do have the consumer's best interest in mind while we still want to make money, but like it's also about protecting that consumer. And so
Absolutely.
they say the regulation is for that, but sometimes it's so convoluted that it's like it really doesn't protect the
You're,
consumer.
you're talking to somebody who lives in Berkeley, California, and we have a sewer lateral ordinance that is so ridiculous because they didn't take any of the unintended consequences of their actions into, for example, Oakland has the same sewer lateral ordinance. If you're a normal homeowner and you live in cookie cutter land where you have a sidewalk and your house is set back from the street by about 20 feet, you can pretty well predict what your sewer line is going to cost. And they have now they used to make you be responsible for your sewer line right to the edge of your property. Now they make you be responsible for your sewer line to the middle of the road where it meets with the city sewer line. Okay.
Okay.
And most of these, just like in all building construction, a lot of the problems that occur when two different materials meet. That's where you can have a leak or you can have a break or you can have whatever. Most of these breaks that occur are actually the ones that are in relationship to the city line. The city passed the cost on to the consumer instead of charging a very minor $2 a year tax on everyone. So what happens, the unintended consequences of that are that in my area, you drive down the street, which used to be nice and level, and you have a patchwork quilt because this consumer is responsible for the asphalt and the compacting of the soil where they have met with the sewer line. So sinkholes are happening and also bumpy roads, holes in asphalt, what have you, because the different quality of the vendors, because everybody's using the cheapest person they can possibly get. So the quality of the vending is not good, or the vendor is not good. They didn't bother to talk to a single plumber or a single realtor when they were creating this ordinance. And if you are a little old lady, this happened during the big, huge economic downturn. There were little old ladies living in the hills of Oakland who had not a 20-foot lateral line. They had a 200-yard sewer lateral line that met with the city street. So that's not a $6,000 sewer line. That's a $30,000 sewer line. And they made it a point of sale ordinance. So let's just say during the economic downturn, you're a little old lady selling your home short, and you've got an FHA buyer on the other end trying to buy this home. And they're only putting down, what is it, 3%?
3.5% for FHA.
3.5%. They can't afford to fix the sewer line, but neither can the old lady. So there were people that literally lost their homes because of the sewer lateral ordinance, because the buyer couldn't afford to do the line, the seller couldn't afford to do the line. And oh, by the way, when the legislation was created, banks were exempted from having to follow the ordinance.
Of course.
So they were able to foreclose on the home, then bring it back as an REO, still without ever doing the line, I might add, and still passing that cost on to the consumer. Where's the fairness in that? So nobody was thinking when they made that regulation. There are other regulations that are coming into play right now in Berkeley, one of them being Ember, which has to do with your maintenance around the house for fire control. And I understand it, but there are some people who have a house that is less than 6 feet away from a major tree, and it's going to cost $10,000 for them to cut that tree down. Or the BASO, the energy conservation ordinance we have in our area. You're now having to meet a 6-point requirement. Well, that sounds easy. And in the old days, it used to be just like weather stripping around doors and, insulation in attics. Well, now it also includes your water heater. It also includes your electrical system. It includes whether you have a gas stove or not. It includes a bunch of things that all are in the range of $30,000 to fix. And that's going to happen on every single transaction. How is that going to be negotiated properly between people who don't really have the money to do that because they're trying to spend every dime they have to buy that house?
No, absolutely. And really that goes into, we talk a lot about affordability. And right now, affordability is such a big issue.
The crisis.
It's the prices, it's the insurance, it's the taxes, it's the interest rate, it's all of it, right? And it's not just, it's your groceries, it's everything else you have to pay for to survive. It's not just that home purchase, but we know, that home purchase really is one of those steps you should take to like make stability in your family. But like, how are people going to do it when they can barely afford to like live as it is, And
Well, I heard an alarming stat the other day that the average age of the first-time home buyers has gone to 40 years old
I was
in
gonna
our
say I
area.
heard like in mid-30s is where it was at. So
Yeah,
I'm
it's
not
40. Yeah,
surprised, like,
it's 40 in
because
California, cost because of the prices, obviously.
Mhm.
And you think about the ramifications for all of society for that. I mean,
it
you're
it's
right.
been a cost
Forward.
issue, right? And that's what, we try to focus on is how can we make it more affordable for someone to buy a house, but not like destroy the housing market, right? We don't want rates to just plummet where it destroys the housing market, but like one, we do need rates to come down some. But like what are the other costs associated with buying a home? Like things we look at is like the credit report cost. How can we get that to come down? Because even though it doesn't seem like a lot, if you're having to shop multiple lenders or you get denied, that starts ticking up if they make you pay for your credit report up front.
Right. Isn't it like $500 or $600 a pop?
It's a
If you
hundred dollars right now,
Okay.
but we
So
just
in
heard
our
that it's
area, it's $500 or $600, by the way.
we've heard it's going up again. And so it's like, yay, like, and so that's one of those things that's like it's an added cost to buying a house, which we understand it's needed, but how can we make even just that one fee more affordable for the
Or
average?
what about appraisals? Those are I'm seeing houses need at least 2 appraisals when they're over $1 million. Now, granted, the person who's buying a house that's over $1 million may be able to afford that, but those are running into the $600 or $700 range.
And they
Uh,
used to be like 450.
I know. And, there's a lot of other things that are associated with purchasing a house that you don't even think about, in terms of your utilities or, when there's a gigantic sticker shock is you have this gigantic population of older people, of which I am one, who have mortgages at the 2.65 rate because they managed to refinance at the time that was available. And the end result of that is those people are not selling their homes. Like if I want to stay living in my neighborhood, there's no point for me to ever sell my home
Right.
because I will never be able to replace it. I will pay more money and my loan rate will be way higher and I'll be getting less than what I have now. It doesn't make any sense.
We have clients, as you get older, you're like, oh, I'm going to downsize. So we had a
Right.
client that was like, hey, I want to downsize. I want to sell like my $400,000 house and buy something a little cheaper. I think it was 500. I don't know. But she was like, I want to buy a little cheaper, a little smaller. And we're like, okay, we ran the numbers for her. And I'm like, your payment goes up
Right.
because your rate is so good at what you have. Your payment is higher to downsize.
Right.
It's almost like you might as well just keep what you have at this point.
Right. If you want to stay in the same neighborhood, that we're seeing a huge exodus out of California actually because of exactly this. People can't afford to downsize in the city that they live in, which is really bad. And I personally, I loathe it that my service providers, like my mailman or the elementary school teachers or people like that, can't afford to live in the community that they serve. that they're, moving out way the hell out. I mean, we're talking, I know of some people that are commuting 4 hours a day to get to their jobs. That's crazy. That's crazy.
No, we see that too here. Texas isn't expensive in relation to California, right? But in the bigger cities, it can get a little more expensive. Obviously, like in the Houston area, if you're trying to buy in the inner loop of Houston. And so like my husband is a full-time firefighter. And so
Oh, wow.
he's a lot of guys that are that live out of the area, right, that they serve because they just can't we usually can't
Right.
afford, especially when they're rookies. Like their starting salary is not enough for them to live in the area that they're serving. And so they'll drive. Some of them drive from other metropolitan areas. So we know people who live in like San Antonio, which is like 3 to 4 hours away. Some live in Dallas.
Yeah.
He has one guy that honestly lives in a different state and he just flies in for his shift and flies home.
Yeah. I can understand it. It is crazy. So I cannot tell you how much I appreciate what you're doing with your organization, because if you need to be able to have watchdogs on all this stuff, and we need to be able to figure out ways to surmount the affordability crisis. In my area, we have a big problem with insurance. I don't, how about in Houston? Are you guys having the same problems?
In where we live outside of Houston is not as bad because we're in the north side of Houston, but on the south side of Houston, which is Galveston and the Gulf Coast,
Hmm.
we've seen people pay more in insurance than they're paying in taxes because they have to have
Hmm.
their regular homeowners insurance policy, they have to have a flood policy, and then they have to have a separate wind and hail policy. So when
Hmm.
you're starting to layer these policies, like the risk factors and everything, I mean, you're paying, I think they were like $6,000 for all of their insurance, which my
Oh,
int
honey. Oh my God. I'd be thrilled with that. Where I am, we have such horrible fire danger. I have to have something called California Fair Plan.
Mhm.
And my combined insurance for my cars and my house, with the different policies I have to maintain, is over $18,000 a year.
Oh. Our average is about 3,000 is what I would say, is about 3,000 a year on most regular homes our area. But like in that Gulf Coast, you're seeing 6 to 7,000.
And
But
it's all weather related and climate change related, unfortunately. I'm sure.
unfortunately, and so
Yeah.
that's what's hard is how do you explain to somebody like, "Hey, like, you're gonna have to add an extra, X amount a month for insurance alone."
We actually now have an insurance contingency in our contracts because
Wow.
it's so problematic. And there are some places in California, like, Malibu, which recently basically, all that whole area that burned down. I can't remember the exact neighborhoods that it was, but you can't get insurance there.
Well,
So
and I
how does somebody get a loan if they can't get
right.
insurance? You know?
No, and that's, goes back to not only, like, people not wanting to move for rates, but, like, what if they just can't sell because no one can buy it? What if
Hmm.
they want to move, but they just can't because
Hmm.
there's no one to, purchase that home because of insurance?
Hmm.
Um, Earlier this year, I thought I heard that there's some insurance companies basically pulling completely out of California that they will no longer write
That's absolutely true.
policy.
Your USAA, Farmers, State Farm, Allstate. So anything that has state or farm in their title, along with USAA, which is unbelievable to me. USAA has always been like the gold standard. They are all gone. They will not insure. Most people are going to places like the zebra.com, which
Okay.
is a clearinghouse for insurance. And you can get, sort of not fly by night, but companies you've never heard of, to insure your home. And, there's a big risk in that because, when your house burns down, you need a lot of money to, and if there was a horrible fire where all the houses burned down, would some of these insurance companies actually be able to fully cover all of their clients? I'm not sure. And California Fair Plan is basically out of money as well. So
Oh,
it's a big crisis here, and you can't get a loan without having insurance. So, so
so
some,
it's I say an evil cycle
yeah,
is what I feel like is
yeah, it's a catch 22.
I understand why insurance is important and I understand that the insurance companies don't want to lose money either, right? No one gets into business to lose money. but it's like, it's gotta be a better way. What's a better way for the consumer to be able to live in a home and, like, feel protected? We here work with, like, insurance brokers that, like, shop the policies for us, and we talked to them one time because they would always be able to get, like, we had 2 that we would use, and sometimes one was cheaper, sometimes the other one was cheaper, and we kinda talked to them like, "Hey, why is that?" And they said they go to these companies that basically they pick and choose kind of where they're writing at. So if they see, hey, we have 10 homes in this community already under a policy, we need to stop writing there because if something were to happen, we cannot insure all of those. So
We've Yeah.
like that's kind of interesting in the insurance world. And it like supply and demand in a sense, but
Mhm.
there's fewer supplying insurance providers, obviously demand for them is going to increase, which means prices are going to increase. And so that's what's really hard is like if everybody kind of shared the wealth or loss, really, in the case of insurance, maybe we could bring prices down. But I also get it that people care about their bottom line and it's hard.
Yeah, when I was initially shopping for insurance, because I got a letter from farmers saying they weren't going to continue to insure me. And by the way, as a realtor, I've done over 1,000 transactions, and I have probably referred 500 people to a particular insurance agent who basically went, "Can't help you, sorry," which was like a little bit of a whoa. But when I was talking with other realtors when this first happened to me, and they were like, "Well, you should actually go talk to somebody in Southern California because of exactly what you're talking about." They had different quota systems. So I was able initially to get farmers down there to cover me here. And then I got a letter from them too, saying they were pulling out of the state. And then that was when I had to go to California Fair Plan. But initially, because of the quota system, by just going out of my area, I was able to obtain insurance. It's a crazy mixed up world out there. And we're on the front lines as realtors and as mortgage brokers. Nobody understands exactly the ramifications of what it is we do. And we're also competing with all of these disrupting industries. Like, right now, half of your clientele are probably going online to Rocket or, what's the other one? I can't remember the name of it. The other one that people are using quite a bit. What is it?
A big bank. I don't
Well, anyway, they're going
Right.
online and they're getting quoted whatever they're getting quoted with nary a human connection. It's all just, push a button and you see whatever they come up with. And forgetting about that human connection is also remembering, it's basically the breakdown of our entire set of communities, honestly. Because as you say, that person who's down the street and who supports the little league is way more important to that community than an entity that is based out of someplace 3,000 miles away. And that's the
But
thing
and
that
you
we're
find
losing.
too, like, when you don't have that human connection, then they don't know for sure that you can even qualify or that it's gonna work. You're just saying, "I do this, I make this is my credit score," but there might be something you're forgetting that if somebody when they look at it, they can say, "Hey, like, this isn't gonna work." It's the
Right.
same thing, like, looking at pictures online of a house. Yeah, that's great and all, but, like, until somebody takes you there to show you the house and say, "Hey, like, you're not gonna like this," or "This is an issue," like, that expertise is really what you need that you're not gonna get just from a computer screen.
Exactly. Well, you are a way doll. Thank you so very much for being here today. If people want to get a hold of you, I think this has been a very interesting conversation about some of the issues that we all face in real estate and mortgages. If somebody wants to get a hold of you, how can they reach you, Rachel?
If you go to our website, brokeractioncoalition.com, there's a place that you can contact us there. We would love to help any mortgage professionals and any real estate professionals can get involved with as well just to see what we're doing and what we're fighting for.
I love it. I love it. Thank you for your fight. I appreciate you. Happy Thanksgiving.
Happy Thanksgiving to you as well.
If you loved hearing from these incredible voices shaping real estate, you'll want to catch what's next. Click the video on screen to keep discovering more inspiring stories.